for anyone who may not know me, my name is Mike, and I'll be taking over for TrendSpider doing, these YouTube videos, webinars, and some other stuff behind the scenes, for the platform. And a bit about me, I've been a long-term user of the TrendSpider platform, and obviously I'm part of the team. And as I've been working here and using the platform, and working directly with the creators of it, I've learned that it's a ton more than just charts, like someone asked in the chat there. It's a lot more than just charts and automated chart pattern detection. It's a whole, platform that's going to allow you to automate and streamline your trading workflow very efficiently, with all the scanners and all the stuff I'm going to show you guys today. And so I just want to help you guys put in time to setting up your platform now so that when opportunities come around like this big massive dip we had here from the tariff news, you guys are way more prepared and you guys have a lot more conviction, to take trades when that stuff happens. And so obviously we're going to be covering specifically how you could have navigated this tariff-driven market. And if you would have, had your platform set up and utilized all the tools I'm about to show you, there were several bottom signals there, you guys. So timing the bottom is hard, but there's various signals that you guys can use to help guide you as to where the bottom is. Stuff that we're going to cover today is going to be the VIX. We're going to be covering market breadth, composite symbols, and even some scanners to help you guys spot opportunities. And also, we're going to take a look at the strategy tester so that you guys can not only spot them, but actually backtest them and see how it would have performed. We're going to start with the VIX. Let me just pull up the VIX here. And so the concept of the VIX itself is pretty basic. It's essentially a fear gauge of the overall market. So the higher the VIX index goes, the more fear there is essentially in the markets. And what it actually measures is the implied volatility of the S&P 500. And so when this shoots up higher, that means that option prices are higher, people are hedging their portfolios, and people are generally just scared. Basically, it uses calls and puts of the SPX. And when this is higher, that means option prices are higher. So when it spikes, that means people are expecting fear and large market moves. And so that's why it spiked here in this tariff-driven market right here in early April. As I'm sure you guys all remember, it hit around 60. And as you can see overall, when this VIX index spikes, it doesn't necessarily stay there for very long. You can see all these wicks on the weekly chart. When it spikes up, it comes back down pretty quickly after. And so what does that mean? You guys are like, yeah, buy when people are fearful, obviously. But what exactly does it really mean? So I'm going to show you guys a few things you can do here. The first thing I want to do is actually put on this price compare indicator and use SPY as the main chart. And so what is this going to do? This allows me to see the VIX and the SPY on a single chart. Okay. And so I'm just going to go back here and kind of mark, starting all the way from like 1998, you can see the VIX 50 level is generally a good, area to mark as to where the VIX spiked. There's this ton of fear, and it could have potentially been, a market bottom. So let me just mark these with some vertical lines quickly. As you can see, when this VIX spikes, it generally marks the lows in the market. Obviously, in COVID, we saw it right there. And all these different times throughout history, when the VIX popped up, has definitely been, a solid signal, especially here in recent times with the tariff stuff, that marked essentially the lows of the market. But this is pretty basic stuff, you guys. Like, yeah, you can draw vertical lines, but TrendSpider can do a lot more than just, obviously draw vertical lines on your chart. So what I'm going to do, I'm going to open the strategy tester here, and we're going to put, just pretty much buying the SPY when VIX spikes to the test with some real data. And so I'm going to name the strategy just VIX long, add a condition group. And the first condition is just going to be a blanket one for SPY. As long as SPY, is greater than 0, it's existing, we want to go long. And then this will make sense in a second here, because for this one, we need the high of VIX is greater than 45. We want to go long on SPY. So that's right. You can, in your strategy tester here, these are the entry conditions. And so I can change this to a different symbol. So this is telling the strategy tester that when VIX goes over 45 and the SPY is pretty much just there and over 0, we're going to go long on the SPY. All right, so VIX over 45, go long on SPY. For the exit, which you have to set as well, we're just going to do, just for this test, 30 weeks, 30 candles on the weekly. Then we're going to test this as far back as we can, all the way back to 1993. Hit apply, and it's going to run a back test here that simulates going long on the SPY whenever the VIX spikes. So as you can see, right next to our vertical lines that I just drew, all of these entry points happen, and then it exited 30 weeks later. So what is this? How is this beneficial? For one, instead of just visualizing it on a chart, which it actually does automatically for you, you can see there's 10 positions in history, 80% win rate, and then probably the most crucial thing here in the tabular data is the max drawdown of minus 43%. So even you guys, if you would have bought just when blindly and VIX went over 45, like you still would have seen a decent sized drawdown. So this is a great way to kind of build conviction in a signal like this. Because if you didn't know this going in and you're like, oh, I'm going to buy SPY when VIX spikes, seems simple enough. But now you know that you still have a good amount of risk on the table. And you can open this, performance chart right here. And this is going to be your equity curve. So overall, it is, profitable over time. I didn't necessarily make this strategy so you guys can run it like an automated bot. I'm using the strategy tester as a way to test these signals and see how it performed in hindsight. And you can also view, the drawdown. So you can see when the drawdown happened. Here in 2009, you saw that max drawdown of minus 43%, but otherwise, you're down about 20%. And in the price behavior explorer, you can refine this even a little bit more too, because based on your strategy, you can see how you performed as time goes on average. So this is the mean change percent of how much money or percent change you're up or down based on just buying SPY when VIX went over 45. So as you can see here, the first 9 weeks, you were on average down about 1% or 2 for like the first 9 weeks. And so that's kind of useful to know, because maybe you're like, all right, maybe I want to wait a little bit after the VIX breaks over 45 and then go long, because I see here from the price behavior explorer that on average, the first 9 weeks, there is a drawdown. Now, again, that could make you miss out on some potential bottoms and stuff like that. But I'm just showing you guys that how you can use, the strategy explorer to help build conviction and view some real data and backtest the signals that you guys use. It can be any signal. I mean, it's super easy to build the strategies like this. I literally did it in front of you guys in like 20 seconds. And so it's super easy to do stuff like that. Okay. And you can view all the granular details of specific signals. And so that is my spiel on the VIX. I want to get into something a little bit different now. And that's going to be using the anchored VWAP in addition to this VIX signal to help you guys spot, key areas of support on the chart, especially in a downward market that's driven by headlines and all this stuff. And so if you don't know, let me clear my chart here. The anchored VWAP is essentially just a line. I'll plot it right here like the 2009 low. All you have to do is go over to the candle, right click, create an anchored indicator, and add the Alpha Trends anchored VWAP. And as you can see, it plots this line. And this line is basically just telling you what the average price paid of the stock is from the anchor point. So what it can be used as, in a tariff-driven market and trying to spot support levels or levels to buy at, is you generally want to mark it at the low points on the charts here. So obviously I'm here in like 2009. I marked it at the swing low, it's called. And then as you can see, as time went on to 2010 and 2011, it marked these lows like perfectly right there. And so once the market puts a low in, it's definitely a great idea to draw one of these on your chart and keep an eye on it. But as you can see, as time goes forward, it becomes a little bit irrelevant. So you have to kind of like keep drawing them as time goes on. So another significant swing low was here in 2016. We'll draw it there. You see it marked a couple lows there. And look at this. It marked the 2018 low almost to the T. And then we're going to pass it over to 2018 as well. You kind of get the point. You're going to keep drawing this. Yeah, this is COVID. So this is kind of a tough situation. Global pandemic spikes. Technicals kind of went out the window for a little bit there. So it blew right through. But as you can see, if you keep going, this one did also mark the 2022 low almost perfectly. And you can just keep drawing them as time goes on. The 2022 low goes here. And then here, we got the 2023 low. So now you have all these levels on your chart that are showing you potential spots of, major support. And this is going to be really useful to use, especially as the market dumps. As you can see, this 2023 one got blown through. But maybe you think we're going to have another leg down. You see this next one at 2022. So what you can do right here, you can just create an alert, at this VWAP level, anchored VWAP. You can just tap all three. If you want to see, if it just gets anywhere near the line, you can even move up the sensitivity. So you see if I move the sensitivity up, the alert will fire within X period of it right there. Then yeah, you just give your alert a name, set it to not expire for a while, set it how many times you want to trigger, create it, and boom. Now you basically have an automated way of telling you when exactly the market is hitting a key support level. And so, we just plotted these manually, which is great, but TrendSpider can do, more than just making you manually plot these all the time. Because if I go and change to a different chart, they're not going to stay there. This one was already just there, but all those other ones, they're not going to stay manually. So let me just remove all the manual ones real quick. And if you add, the anchored VWAP indicator, you just go to indicators and add it. I have it right here. You can anchor it automatically to the lowest low on the chart. You can set your window back however many periods. We'll just use 50 here. Apply it, and boom. Now you automatically have the swing low anchored VWAPs plotted, and it even works if you were to switch between different charts. And so that way it's automated, and you don't have to keep redrawing it all the time. And even a step further, you guys, you can set up a scan to help you find anchored VWAP is the scan I'm looking for, the swing low. You can set up a scan to scan for stocks that are coming up and approaching that line as well. Put it together right here. We can drop it in the comments if you guys want to, take a look at this scan. But essentially what it's going to do, it's going to scan for stocks coming down to the 50 period anchored VWAP line. That's within 3% of it. It's above it. It has, a market cap over 2 billion. And so you get all these results right here. You see like PayPal. You can just scroll through all these results. Not all of them will be like insanely good knockout picks, but you can see automatically which stocks are pulling back to key support levels with this scanner. And it's definitely a great one to run through, especially as stocks are pulling back and you're looking for stuff at key support levels. Okay, and so that's mostly my spiel on using the anchored VWAP. As this webinar goes on, we're going to get a little bit more nuanced as time goes on. So these first two are a little bit basic, VIX and anchored VWAP. You can combine the two to help you time, significant support levels. And now I want to get into something called the market breadth. So the market breadth is essentially your ability to analyze an overall market or sector and the components within them, all on one indicator. So I'm going to add it to my chart. It's just an indicator like I showed you before. You just go up here, type market breadth, and add it, and it'll pull up down here. So you click the settings here. I have it on the lower axis. You can have it on the main chart, but I have it on the lower. And the first thing you need to do is pick a list. I think most people would probably agree the S&P 500 is a good representation of the market. But if you want to dive into semiconductors or other sectors, that's perfectly fine to do as well. But for now, we'll keep it at S&P 500. I uncheck ticker. And then for the series, this is where it gets important as well. There's a few different ones you can use. So the most simple of them is probably these SMA ones. So what do these tell you? If I do the above SMA 200 one and I click apply, this line is essentially going to plot the percent of stocks that are above the 200-day SMA that are within the S&P 500. So it's allowing you to see the overall strength of the stocks within the index itself. So that one is cool. But I think the best one, or one of the best ones, is the new 63-day low. And this is kind of almost similar to the VIX in a way, because when this line spikes up, it's showing you the percentage of stocks in the S&P 500 that are making new 63-day lows. And so that's obviously bearish sentiment. People are selling. A lot of stocks are diving. And if you kind of scroll back here, like obviously right here, it spiked way up above 63%. That is a huge signal, you guys. It doesn't always spike that high. And it spiked right up there in April. And that ended up in hindsight marking a pretty good low to DCA, especially if you're just like investor or trading short term, whatever it may be. And here in 2022, it marked it right there as well. This big spike up to 60. Scrolling back, obviously COVID, it marked a significant low as well. Like 84% of the stocks in the S&P were hitting new 63-day lows. And this is why TrendSpider is awesome, because you can analyze this stuff all in one single hub. But now you may be saying, I want to automate this. I want to be told. I don't want to have to look, at this chart every day and like determine when this stuff is happening. And that's completely doable on the platform because we have this market breadth watch list. We can share it in the chat, but it's just called market breadth symbols. I have it up right here. So I'm going to hide that. And then all you have to do, I know it looks a little bit crazy, but that one I was just looking at is just L63 SP 500 for 63-day lows on the S&P 500. And you're going to want to use a line chart. And as you can see all the spikes here pretty easily. If I go to like the weekly, you can see when it spikes, it doesn't last very long, similar to the VIX. And maybe you want to be alerted when it reaches a specific point, like maybe the 60 level or the 50 level, whatever it may be. So all you have to do, you can just draw a vertical line wherever you want it, 40, 50, it doesn't matter. Because if it reaches this point, it's probably at least approaching a solid buying opportunity. So you just draw the line, just using this button right here. You can right click the line, create an alert. I would just tag all three, and then you can set the confirmation candle to something like the 1 hour so you can be alerted intraday. You can set a name, whatever you want for the alert, and then set the expiration, however many days passed, however many times you want it to trigger, and create your alert. And so that is a completely automated way once you set that alert to be notified of when it's a potential buying opportunity. And it's going to be especially useful because it kind of takes your hands off everything and just tells you something that you plan for in the future or in the past. Okay. And there's a couple other ones too. The high low on the net new 52-week high and low on the S&P 500 market breadth symbol is going to show you how many stocks are making new 52-week highs versus lows. And so kind of same deal here. Obviously, when it gets down really low, you can go ahead and set up your horizontal line and create an alert. And then just like that, you have now another indicator that could potentially be warning you of a potential good buying opportunity. And there's tons of these symbols, you guys. We have a whole blog post on them. You can take a look and, use any of them that you want. But those are my two favorite ones. And of course, you can also use it potentially even on the short side. I'm not much of a bear myself, but if that's your thing, you can also alert when it reaches, kind of levels of overextension. Okay. And that is essentially my spiel on the market breadth. And I've already given you guys multiple ways to help you guys navigate this market. Starting from the VIX, we showed you how the VIX, the fear gauge, can be used. And you can combine that with anchored VWAP support levels. And you can also combine that with market breadth. And if you guys set up your platform now, just imagine in the future for the next downturn how prepared you're going to be and how much more conviction you'll have after you've literally gone through the statistics and the strategy tester and you have your alert set. Imagine all three alerts like triggering at once and you're like, all right, I am literally ready, going forward for any market type, and especially a downturn. And so we're not done yet, guys. I still have more stuff to cover. The next thing we're going to get into is composite symbols. And so this is going to get even more nuanced. But what is a composite symbol? It's essentially when you divide one asset over another. And so I have this sector strength list here that we can share with you guys. And what it is, it's a bunch of, the sector ETFs and like gold divided over the SPY. So the one I want to focus on first is the GLD over SPY, which is gold over SPY, because I'm sure you guys have seen that gold has, or was going on a tear lately, and that is reflected in this composite symbol. And also what I'm going to do, I'm going to use the price compare indicator, and I'm going to change this to SPY so we can compare how this composite symbol looks compared to the SPY chart below. So if we go back in time a little bit, you can see when this spiked up in 2009, it clearly marked a 2009 low because gold was flying. It was crazy times back then in 08, 09. And then it happened again in 2011, which also correlated with another low. So essentially, when this is spiking up, it's signaling risk off. It's signaling people are selling, their SPY, their equity holdings for gold. And that is a risk off signal. And you can counter that if you're like a mean reversion type of guy or just a long-term DCA investor even. You can use this as a guide to help you along with the countless other signals I just gave you guys to help you time when a potential bottom would be in. So whenever you see this spiking, like in COVID, it spiked. It started spiking in the 2022, grind down bear market. And then just recently it spiked to almost the same level as COVID as the market made a low. And so GLD over SPY is just one of them. I mean, there's so much stuff you guys can do, with composite symbols. It doesn't have to be just two symbols. You can literally make your own like Mag 7 ETF, like equals Apple, Microsoft, NVIDIA, like all those stuff added together, divided by 7, and you'll have a Mag 7 ETF, stuff like that. But you can also just use it as kind of a sector strength gauge Because as you can see, gold is obviously on top right now. I sorted by highest to low. Then you can see SMH has been doing well lately, which is semiconductors, we all know. Yeah, it's come down from the top, but overall, it's been an outperforming sector. Here at the bottom, we have XLRE, which is real estate. So you can kind of use this list to gauge the overall market sentiment based on sectors as well. And another kind of good one that I like to use for like a bottom signal, I kind of risk off is XLP, which is consumer staples. So when people are buying XLP or consumer staples, the stocks within XLP, it's generally probably signaling a risk off type of event. And so similar to GLD, just keep an eye on these. You know, it's really good to have. Not many platforms, or if any that I know of, offer these composite symbols. And yeah, it's just really useful information to see which sectors are performing well. And when you start seeing these guys spike up, definitely compare it with, you know, all the other stuff, the VIX, the market breadth, and it's going to really just help nail in that conviction of your buying opportunities. All right. So now I essentially have gone over many, many things, and they've all been catered toward buying falling knives, buying the dip opportunities. So now I want to get into something more for like the trend followers out there, because not everybody's thing is to buy falling knives or mean reversion strategies, right? And so I want to show you guys stuff that you can use that can spot stocks that are trending upwards even when the market is coming down. And the first scanner there is going to be the correction deniers scan. So let me change back to the candles here on the chart. And if we click scan here real quick, this is going to scan the S&P 500 based on a few different criteria. Let me just go through a few of them so you guys know what we're scanning for here. The first stuff is just some key technical data. You know, the MACD line is above the signal line. The price closes over the 50 SMA, and then the price is within 15% of the 52-week high. So basic key technicals there. Then we have some basic fundamentals, you know, revenue growth, net income is positive. You probably don't want to be investing in, you know, unprofitable companies per se when the market gets rough, and then a good debt ratio under 2.5. And let's see. The next one is going to be using the relative performance indicator. And so relative performance is another insanely useful thing that TrendSpider offers. And it's similar to the market breadth. It's essentially going to tell you how well a stock is performing compared to the S&P 500 over the last year by default. So if you look at like Robinhood, Hood here, it's at 99.8 right now, which means it's literally outperforming 99.8% of the stocks in the S&P 500. So this scan takes it a little bit further though, because yeah, this stock has been outperforming for a while now, but that probably means you honestly missed the trend already, right? So what this scan does, it scans for stocks where this RP line is rapidly increasing, and as well as scanning for high RP too. But if you look at some stocks in here, let's just go through a few and try to find some. You'll notice the RP line on some, like this one, has recently rapidly risen. And so this is a great way to try to find stocks that are starting to outperform now, but aren't necessarily above that 90 RP level yet, you know? And if you look down here in the recent outperformance list, you can see that it's scanning for the RP now. So 57 is greater than it was 30 days ago by at least X%, and it goes from 50 all the way down to like 30%. And so basically in simple terms, it's scanning for this line increasing, and it's scanning for stuff in decent trends based on the key technicals and with solid fundamentals. And so you can use this scan to find stocks, even in a downturn, that are denying, quite literally denying the correction. Like Microsoft just popped up on here. Look at the RP, shooting up right there. It's above the 50 SMA. It has great fundamentals, just killed earnings. And so even in market downturns, you can use the scan to find stocks that don't even realize that the market is correcting. Like look at Philip Morris. It hardly experienced any drawdown. And it's just a great way, especially for trend followers who are just trying to follow trends, to find great opportunities to trade. And let me make sure I'm posting these links in the chat for you guys. Oh, it looks like we already did. Perfect. But if you guys need them, definitely just let me know. After the webinar, I'll be answering questions, so no worries there. And so that's kind of my spiel on this correction denier scan. The next thing I want to get into lastly here is one of my honestly favorite scans now is the Munger 200 week spotter scan. This one's a little bit more simple, but there's a quote from Charlie Munger where he said, "If all you ever did was buy high quality stocks on the 200 week moving average, you would beat the S&P by a large margin over time." And so all I'm going to do is plot the 200-day SMA on my chart. And the 200 SMA is such, a long-term moving average that it's definitely, here, that's actually the daily. So as you can see, I just pulled up Microsoft. It's such a long-term moving average for trending stocks. Whenever it kind of pulls down to it, it essentially normally acts as a really, really good point to show you, like, one, support, and two, and really significant point that people are in the stock at. And so what this scan kind of searches for is, for one, the price is within range of the 200-week SMA, of course, by at least 10%. And then also the price close is greater than the 200-week SMA. So you want to scan and find stocks where, it's trading above the 200-week SMA, but also within a certain percent of it. Because if you scan for it, just pretty much on the line, it wouldn't come up with that much results. And then down here, you said quality companies, right? It's not just straight technicals. So, we have a few things in here like sales per share is greater than the sales per share 4 quarters ago. Total equity is greater than 0, decent balance sheet, current ratio, debt ratio. All this stuff is customizable, you guys. This is just stuff we put in there to help you guys, scan for it. Well, as you can see on the scan results, it's going to find us stuff that is trading right around that 200-week moving average, which over time, according to Munger at least, would signal a good buying opportunity. And especially when markets are coming down, it's, most of them are probably coming down to their 200-week SMA. I mean, look at these lines, like Home Depot. It almost rarely stays below this line. Like if you're buying quality companies at this line, you're probably going to be good in the long run, assuming the companies are quality. So yeah, that's pretty much my spiel for you guys. We covered a lot today. We covered VIX, covered swing low anchored VWAPs, market breadth, composite symbols, and even scanners to help you guys find individual names instead of just, the SPY that are performing well now. So now I hope this webinar has kind of helped prepare you guys. If you're already on TrendSpider, you can import this stuff to your accounts and definitely take advantage of it. Set those alerts up and do all that stuff to prepare yourself. So when the next, big opportunity strikes in the market, you guys are ready to go.